Hello and welcome. You're watching The Money Show. I'm Kavita Thapliyal, and that's right, it's Women Wednesday, where we'll be focusing on women investor queries. That's right, we'll help you navigate all your financial decisions or investment decisions with your financial goals. Whether you're a homemaker or a working woman or someone who's just got your first salary, we are here to help you with our experts and give you the right kind of investment strategy and help you achieve that very important goal of having financial freedom. So let's begin. Just before I go to my guest, let's flash our WhatsApp number on the screen because it's important for you to send across your questions. So please do that. And also our email ID, because if in case you have an existing mutual fund portfolio or any investment portfolio, you can send across. We'll get it checked or help you get the right kind of advice from our experts. Today joining me is Samir Shah, who will be helping all the women investors for their investment portfolio queries. Samir, hi. Good evening. Welcome to the show. And a very interesting set of questions today, and in fact a lot of questions which have come. Let's take it one by one. I'm sure they all need a customized and a specific advice from you. So this is from Divya Bhattacharya ji. She's from West Bengal. She's a central government employee, and she has a pension, but she wants a huge corpus. She's doing an SIP of almost, she can increase her SIPs, that's what she's saying, 41,000 and 2,000 rupees so far every year is something that she can, step up. But she has not yet started investing, it seems, or if at all she has, she's not given us the name of the funds in which she's doing an SIP. But assuming that she has a portfolio, an equity portfolio, since we don't have the funds yet, let's just help her out in both the scenarios. Assuming she has an equity portfolio and someone who wants to start investing in equity, one good thing is that she has her pension, so maybe her retirement is taken care of. But having said that, Divya, you want to step up your SIP, that's again very good. So just stepping up your SIP will make it 43,000. But how would you like to take this ahead? How would you like to help Divya? Samir?
So good evening, Kavita ji, and thank you so much for having me today on your show. So, Divya ji, first of all, let me understand, the large corpus. When we talk about large corpus, it means very different for every person to person. So, let's assume, suppose you are doing 41,000 rupees SIP, and you are willing to increase your SIP by 2,000 every year. And your investment tenure is close to 10 years. If we assume that during this 10 year, if your investment generated around 12% CAGR, we are expecting that you'll able to accumulate corpus close to 1.2 CR, right? Now, as you are willing to accumulate a good amount of corpus or large corpus, here, instead of doing 2,000 rupees step up, a small tip is that instead of doing 2,000, if you can increase your SIP by 10% every year, in that situation, you'll be accumulating close to, the accumulation will be around 2 crore. So a small tip, rather than fixing the step up by 2,000 rupees, I would suggest, you increase your SIP. Our suggestion is you to increase SIP by 10% every year. Now, we are not sure whether you have started, you have invested in or you have taken exposure in equity investment or not. If you have already invested, then your investment should be looking like small cap should not be more than 20% of your total investment amount. Rest 10% you can invest into or the exposure you can take it into mid cap kind of funds, and close to 30 to 40% should be in large cap, 20-30% should be in flexi cap fund, and balance 10% if you wanted to take exposure into gold or silver ETF, or you wanted to invest into what you can say the passive kind of fund. Then ideally your structure should be looking like this. Now, keeping all this thing in mind, what I assume, what we consider is, as you are a central government employee, so one part is pension is already covered and you have a secure job. So considering that you have a room to take little aggressive portfolio, keeping that thing in mind, we are suggesting your portfolio should look like this. First is you should have one flexi-cap fund, that is Parag Parekh flexi-cap fund. Your SIP amount should be around 12,000 in this fund. Second is Motilal Oswal mid-cap fund. Here we recommend you to start with 12,000 rupees. The third is Nippon India Small Cap Fund. Here you can do SIP of 10,000, and balance 7,000. We recommend you to start SIP in index fund like UTI Nifty 50 index fund. So this is the ideally your portfolio structure should look like this. This is very balanced and stable portfolio approach. Wishing you really all the best for your investment journey.
All right, so that's the solution coming in for Divya. But then, yes, Divya, if at all you need anything in detail, so do send across your question once again. And this time, please send it with your existing investment details so that we have a better clarity and, the expert can guide you correctly. Let's take Rita Kumari's question. Samir, she started SIP in 2025 August, 15 years, 2 CR. Bandhan Small Cap, Nippon India Small Cap, HDFC Mid Cap, Edelweiss Mid Cap. Total SIP is 20,000, 5,000 each.
So, looking at the portfolio, first we will and I'll share the observation about Ritaji's portfolio. Your portfolio is completely tilted towards small cap and mid cap. This is little riskier one. So our suggestion is to your portfolio. If you are making portfolio, the total portfolio should not be your total investment should not be more than 30% in mid cap and small cap. As you have just started your investment, our suggestion is that over a period of time, reduce the exposure from mid cap and small cap and increase your exposure in flexi cap or large cap fund. So first is consolidate your mid cap and small cap investment and diversify that fund to Parag Parekh flexi cap. When you consolidated your small cap portfolio, divert that fund towards UTI Nifty 50 index fund. So by doing that, we are by investing in this two fund, it will increase your stability over a period of time. Now you wanted you have set one financial goal for yourself that in 15 years you wanted to accumulate 2 crores. With the current SIP of 20,000 and 15 the investment horizon is 15 years. If your portfolio generate around 12% annualized return, the accumulation in 15 years you'll be able to accumulate close to 1 crore, so which is close to 50% of your total target. So to reach your target, there are two options which you can consider. First is you have to increase your SIP and take it to 40,000 right now. If you are not able to do so, or now in that situation, you have to increase your SIP by 13% every year. Choose any option according to your financial condition. Both if you are selecting both any of them, it will help you to reach your goal of accumulating 2 crore in 15 years time.
Let's take Ankita Shah's question. She's got a couple of funds in her portfolio, Samir, HDFC Flexi Cap, Edelweiss Mid Cap, ICICI Asset Allocator Fund of Fund, lump sum 5 lakhs over there, ICICI Pro India Opportunity as well, ABSL Digital India and Consumption Fund. Total SIP 28,000. She's planning to step it up also by almost 10%, 1 CR in 15 years. And, she wants to know if her allocation is correct and she wants to add a small cap. And, okay, so she wants to make a portfolio for her parents. We are not sure about that because I don't know if that is the parents' portfolio or she wants to accumulate their corpus and give it to her parents. So the clarity is not there in terms of details. But having said that, looking at the funds and assuming that she wants to make the corpus for her parents who are retired right now, what would you like to recommend?
So first of all, the good thing about Ankita madam is she is doing 28,000 rupees SIP and she is willing to increase her SIP by 10% every year. She can she will easily exceed or maybe surpass the goal which she has set for her with the current SIP plus 10 annual 10% step up. She's expected to accumulate around 2.31 CR. So she is largely on track in terms of her goal. So the second part is the first question which she has asked is the allocation side. I would definitely say that the allocation mix is not idle. She is heavy on the thematic fund because so far she is doing 28,000 rupees SIP. Out of 10,000 rupees is going into thematic and sectorial fund. So here, if she can rebalance her portfolio, then because these funds are cyclical and risky and not good for 15 years goal. So I would suggest over a period of time she can get rid of thematic and sectorial fund and diversify this amount to flexi-cap fund.
All right, so that's something that you need to factor in, and also just in case this is the portfolio that you have made for your parents, then the entire planning changes. So get us that clarity and then we can help you once again, but all the best so far. Shiksha from Odisha, let's take her question, Samir, now. Nippon India small cap, Parag Parikh flexi cap, Mira Asset large and mid cap, HDFC mid cap, 15 years time horizon, 1.5 CR she wants to accumulate.
So, looking at the current selection of funds, the funds are really good. The portfolio is really well diversified. So, hence, we are not recommending to make any immediate changes in our portfolio. About the goal which she has set for herself, she has to accumulate 1.5 CR in 15 years' time. And the current SIP of 14,000 in 15 years, she'll be able to accumulate close to 70.50 lakh rupees to achieve the goal of 1.5 CR. Either she can increase SIP right away and take it to 40,000 if she is not able to do so immediately in that situation. The second option is she can increase her SIP by 15% every year. This can also help her to reach the goal comfortably. Kavita ji, I would like to highlight here is we have gone through we have seen close to 4-5 portfolio during our discussion, and all portfolios are there are not much of changes required. I guess the Women Wednesday kind of program which you are running, I guess that is really helping investor to pick right fund for them.
Looks like, and all thanks to very esteemed guests like you who are, regularly being a part of this show, and in fact, a part of this particular initiative of ET Now, of helping women viewers and women investors, handhold them and help them in every aspect of their financial decisions. So thanks to you too. But then let's move on, and a very interesting question coming up. This is from Lata. She's from Andhra Pradesh, and she has a daughter. Lata has just studied 12th standard. Her husband, he works as a watchman, and she has a daughter who is 3 years old, and she wants to save money for her education, daughter's education. And she has invested in Parag Parikh Flexi Cap. She says 1,000 now. She will be able to increase the SIP as and when she is able to accumulate some money. But after 10 years, she wants to know how much can she accumulate for her daughter. Thank you so much, Lata, for giving us this, showing us this trust and believing in us and our experts and sending us your question. And hats off to you. It's the right time to think about your daughter's future education. And Parag Parikh Flexi Cap is again a good fund to start off with. But then going ahead, if you want to increase your amount, what will you guide her and help her with? And looking at the education goal, a lot of other factors are also should be, considered. The rupee depreciation specifically, which is also in news and headlines. One has to factor all of that in. So, Lata, whatever possible, try and accumulate, and later on, maybe you can look for a loan also if that much amount is not enough. But let's not go there now. Let's just help you accumulate whatever corpus you can. Samir.
So, Kavita ji, first of all, I would like to congratulate Lata ji. Say, first thing, if we talk about my mother or my grandmothers, they used to save their money and keep it into the containers, food container. And as and when the emergency was there, they used to help us. And now the cultural shift we can see from the Lata ma'am's example. Say instead of saving money into bank or any debt oriented or non-return generating instrument, she has come out and she wanted to invest and take the exposure into mutual fund, which is really good. Lataji, my first piece of suggestion is not just I wanted to highlight one point here. Say the size of investment doesn't matter. The first important point is the step which you have taken in right direction. That matters a lot, and I must appreciate that at the you have thought about your daughter's education and started investing in that direction. That is really commendable thing. I must appreciate on that line. Now, one good thing which you did is that is you have started your investment with a flexi cap fund, and in flexi cap fund also you have selected a very good or maybe one of the good performing fund in flexi cap category, that is Parag Parak flexi cap. So that is the safest, and for the beginner it is the best fund to start with. So which is so that is first step you have taken in a right direction. Now about you are doing SIP 1000 rupees SIP, and if you continue doing for next 10 years and your investment generate close to 12% return, in that situation the corpus will be around 2.3 lakhs. And here if you can increase your SIP by 10% every year, in that situation the amount will be close to 3.27 lakh. The thing which I wanted to highlight, Kavita ji has already pointed out, though the amount looks a little less, but trust me, when you start your journey with 1,000 rupees, the amount would definitely look less. But over a period of time, as and when you are having some excess fund to invest, start investing into this, and over a period after 10 years, the amount what we portrayed could be different from the actual one. So wishing you very all the best for your journey. Keep investing, and you are, I guess, you become a inspiration for a lot of other women investors also.
Right. So all the best, Lata. In case you want to ask anything else, do send across your question and try and save whatever you can. Let's move on and let's take the last question of the day. This is from Miss Beena Saraswat and Samir. She says that she's a mother of two. She's a single parent and she's got around 40 lakhs after her husband passing away, and she wants to put that money away for her kids. She needs around 2 to 3 crores after 10 to 12 years, and she would want to know the entire strategy of how to stagger this amount.
Okay. So, Binaji, first of all, the 40 lakh investment, right? Your first immediate objective is the protection of your capital, as well as you want a systematic growth on your capital, right? So with 40 lakh rupees right now, if you really wanted to invest, we would suggest you should take a STP route rather than investing in as a lump sum, just because the market, looking at the market condition, it will remain unstable for another 3 to 6 months. In this situation, investing in lump sum might initially in initial phase you might feel why have invested immediately, right? So take the STP route. This will help you to invest in a 3 to 6 months time in a staggered manner, so you can get the benefit of market volatility. Right now, if you invest 40 lakh rupees as a lump sum now, and if it generate 12% return for next 12 years, in that situation your accumulated corpus would be around 1 crore 55 lakh. Now, assuming that if you wanted to accumulate 3 crore in that situation, first is if your portfolio generates 15% return, which is little aggressive. So we don't recommend that we should go run for the high return side. So to achieve 3 crore goal, we would suggest that you can start SIP of rupees 5,000 every month. that this can also help you to reach the goal of 3 crore, right? And this 5,000, initially you start with 5,000, and every year you increase your SIP by 10%. This plus your lump sum investment, both put together, you will be able to achieve your goal. Now, initially to start with, there are a couple of suggestions which you have to keep in your mind as you are a single, you are mother of two and a single parent. In that situation, keep 12-month expenses in a liquid, or this is the emergency fund, which you can keep it in a FD or a liquid fund. And the rest investment you can start with, the way I initially discussed, that you start with STP, invest into index fund like UTI Nifty 50 index fund, balance advantage fund like HDFC balance advantage fund, and one aggressive hybrid fund, that is ICICI Prudential Equity and Debt Fund, to reduce the risk and generate moderate return over on your investments.
So that's a solution for you, Beena, and all the best. If in case you want more help, do write to us again. And with that, it's a wrap on the show as well. Thank you so much, Samir, for being a part of this show and helping our women viewers and investors navigate to their financial portfolio. And for all of you, before I sign off, I'm going to leave you with our WhatsApp number and email ID where you can send across your questions. And if it's a women investment query, we'll be taking that in our Women's Wednesday show next week. Thank you so much for watching. Goodbye.